I'm Larry Ray, President and CEO of American Manganese Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Ted Dixon, CEO and co-founder of IncResearch.ca, Canada's first online financial news and research service. Welcome to the show, Ted.
Well, it's great to be back, Jim.
The world is awash in negative bonds. Something, what, $7 trillion worth of bonds where you pay the government to hold them?
Isn't that quite the number? That was a number that Bloomberg came out with in February. Now it's probably even more than that now. But I think that we're finally reaching some sort of a tipping point here, Jim. We're starting to see all these kind of lightning strikes hitting the markets, out of the blue, that don't really make a lot of sense. For example, today, the Central Bank of Sweden decided that, 4% annual growth isn't enough for their economy. For whatever reason, they're worried about inflation being too low, so they decided they would do more QE, quantitative easing, on the hopes that the currency would weaken. Well, guess what happened? The currency went up, just like it went up the last time the Japanese central bank tried to do something unconventional in terms of going to negative interest rates. Maybe part of the reason is that we're sitting on this $7 trillion US, that's like almost 10 trillion Canadian, of debt, government debt, where the bondholders are actually paying the government for the privilege of holding it. This is not only nuts, it's abnormal. Like there is something dysfunctional with our financial system right now, and it was even more dysfunctional about it. It's like the doctors have created it. I mean, it is the central banks that have created this situation. It would be like you and I, going to our family doctor and saying, well, we have a cold, and and instead of giving you a flu shot, it gives you a shot with something that gives you a bug. I mean, we're really kind of, I think, finally waking up in the financial markets to the warped situation that we're in, and I think we're going to be seeing more and more of these lightning strikes coming out of the blue. When central banks try and do something and the opposite happens, and it's not just central banks; it's any large organization that thinks they can manipulate the market, is finding out that they can't. Now, just last weekend, we had a meeting of oil producers in Doha, and one of the larger producers, the largest of that group, Saudi Arabia, is trying to gain market share by driving down the price of oil. So they decided effectively that they would scuttle any agreement to limit production, likely on the assumption that the oil price would go down so that they could, gain more market share because they're the low-cost producer. Well, guess what? The oil price went down for a couple of hours, but then it went right back up again. So we've got this situation, but central banks have really warped the global economy to the point where it won't take much to set off what I would call an inflationary spiral. It hasn't happened, and yes, I know there'll be lots of people out there who go, oh yes, there we go, there goes Dixon joining that whole crowd of people who said central banks are going to cause inflation. Well, we haven't had it yet. Well, we actually have had it yet. We have had it. We've had it in asset prices. We've had it in Vancouver real estate. We've had it in London real estate. We've had it in biotech stocks. Eventually, it's going to surface in areas such as consumer goods and consumer products and services. And that is when central banks will start to freak out. And why is that? Because that is unequivocally part of their mandate to control consumer prices. So just as they feel that they'll be able to respond should that happen, the market's sending a lot of warning signs saying, actually, things are not in anyone's control right now. And we're getting these lightning bolts, and as soon as a storm of inflation hits the global economy, it's going to be very difficult to contain. So we'll see how this plays out. Perhaps there will not be a storm. Perhaps there will be a reprieve from this. Perhaps it'll only be asset prices. Perhaps Vancouver real estate will go up 50% next year, and you'll still be able to buy a cheeseburger at McDonald's for under $2. But maybe that ride will take a bit of a reversal. Maybe eventually beef prices will go up and bread prices will go up, and maybe the cost of living as measured by central banks, maybe that's next in line for the big global surprise. We will have to see. But the bottom line is, with $7 trillion of government debt where you actually have to pay to hold, and people are actually doing that, there is something really wrong with our system, and markets, I think, are starting to show the underlying weakness of that.
Consumer debt has been a big concern. They keep pointing to the fact that perhaps Canadians and others don't save enough. Well, what incentive is there if, negative interest rates are around the corner?
Well, this is the whole point. First you had Mark Carney when he was the Bank of Canada governor, admonishing Canadians, don't spend too much, don't rack up too much debt, as he's cutting rates. And then you have, his follow-up act, Stephen Poloz, who's even cut further since he took over, and is saying the same thing, although not with nearly the sort of consternation that Mark Carney had. So these central bankers will run and point to other people as being the culprits here, but they are the culprits. I mean, we had the central bank governor and his sidekick, deputy governor on Parliament Hill, this week, saying, well, it's not our fault, that housing prices in Toronto and Vancouver are going up. It's the fault of other people for not regulating. I mean, basically, that's what they were saying. They're saying, well, we can't help it. We just have the interest rate. We can't help it when prices go up. No, but they can use the interest rate to drive prices down wherever they can use the interest rate to take it down and drive what they hope will be prices up in areas that they like. And when it goes up in areas they don't like, well, then they blame it on somebody else. So, I think the limits of central bankism is being exposed for what it is, and that is they're able to raise interest rates above what the market needs. They're able to lower interest rates below what the market needs. So they're able to distort prices, but they're not able to actually control which prices go up and down. And that is something that just unfolds almost seemingly in a random kind of path. And first round, second round, since, the financial crisis has been asset prices, whether it's been art, as I said, or real estate. Eventually, Jim, it's going to hit Main Street, it's going to hit services, it's going to hit what we pay. And already, there's evidence that that's been happening in Canada. Yes, consumer price index, the way it's calculated, it has a downward bias because it incorporates all sorts of, technological improvements that give the prices a downward bias. But anyone who, has to spend money on their kids' college tuition, who lives in a city, who spends most of their income on food, poor Canadians, they know that the cost of living has been rising. But unfortunately, I think we ain't seen nothing yet because, so far consumer prices have been relatively well behaved compared to what asset prices have done. But there is a chance that we're heading into a period where that's gonna there's going to be a role reversal, let's say, and we're going to see an increase in consumer prices. So, it's not a slam dunk that that's what's going to happen, but it's certainly a risk. And for all those pension funds and insurers who are sitting on these negative interest rates, they're losing a lot of sleep over it. I mean, a lot of that $7 trillion is being held by the central bank, and people may take some comfort from that, except who owns the central banks? Well, guess what? It's the taxpayers. So, you can have Ben Bernanke say, well, we've been sending, so many billions a year to the U.S. Treasury from our because of our quantitative easing program. Well, that's all very good, but if all those bonds that they're holding all of a sudden lose a lot of value, guess what? There's going to be money that's going to have to go the other way to prop up the central bank. So we'll see how this all plays out. At this point, we're seeing some warning signs. When you start seeing these types of events happen, where central banks, loosen monetary conditions only to see their currencies rise. I mean, these are warning signs. These are warning signs that the system is becoming unstable, and that's probably a good reason why the price of gold is holding up and going up, no matter how much selling comes in the market. Today we saw a big whack of selling hit the gold price as it was moving up over $1,260. But we'll see how long it's able to. Those sellers are able to keep the gold price down. I mean, I'm not a big gold price conspiracy theorist by any stretch of the imagination, but when you see $2 billion reportedly of sell orders hit the market all at once, something's going on, right?
Well, Deutsche Bank's been caught fixing the price of gold, so the manipulation is taking place.
Well, and it's not that hard of a market to have an impact on, particularly if you're a central bank, or a government agency that's got a lot of other people's money to throw around. So as I mentioned, I've never been a big gold market conspiracy theorist in terms of the magnitude that might be going on. But now, given the warning signs that we're seeing, I'm sure there'll be a lot of games being played to try and make it seem like the situation's completely under control, but it's not under control. It's not under control because if it were under control, when the Bank of Japan decides to go to negative interest rates, you wouldn't have a wicked whiplash rally in the end. So, the system is starting to show a lot of strain, and it seems to be wandering around kind of like a child who's lost their parents and, in a shopping mall and is, getting tired and, is throwing temper tantrums. This is the kind of market situation we've got. So the Fed is in a real box now. It should have raised interest rates a long time ago. It raised interest rates in December, and we saw what happened then. And no, I do not believe it was because of China that the market went down. No, I do not believe it was because of oil. I mean, oil and the Fed are joined to some extent at the hip. But the fact of the matter is you had a Fed that raised rates too late into their economic cycle, and, it was not taken well by the market. So how are they going to raise rates? They have a meeting in April, the next week. Could they raise rates? Sure, they could. But, they're going to do it as the Atlanta Fed is predicting that U.S. GDP only grew at 0.3% in Q1. They're going to raise rates as economic growth is slowing down. This would be a very courageous move on their part. So we'll have to see. I doubt that they're brave enough to do that. And if they're not brave enough to do it in April, they certainly won't be brave enough to do it in June. As we get within a few weeks of the Republican convention, it'll just be too politically dicey for them to make any move then. We'll have Brexit vote coming up. So it's kind of, if they want to do another move, it's either now in April, I would assume, or it'll be they'll try again next December after the presidential election is over. So politics is starting to play into the Fed's calendar. Meanwhile, you've got all these underlying fundamental problems in the bond market. So it's not a good mix coming right up. And I have to assume that if they had better economic data coming through, they would definitely raise another quarter point in April. But I just don't see how they're going to do it. And if they do it, we'll see what happens. But we'll know in a week.
We'll have more with Ted Dixon right after the break.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Unbelievable harmony, spectacular performance, the ultimate tribute to the Everly Brothers and Simon & Garfunkel. Bird Dog and the Vintage Electric Band coming to West Vancouver Friday, May 6th at the K-Meek Center. Buy online and save at ontourtickets.com.
Welcome back. We're speaking with Ted Dixon. Ted, apparently there are secret negotiations underway between Alberta and BC over the Northern Gateway pipeline. Perhaps we'll take your pipeline to the West Coast if you take BC's hydro from the Site C dam.
Well, it doesn't surprise me if that's happening. I haven't seen any confirmation of that, but you have to believe that the NDP in Alberta are totally freaking out right now after what happened at the NDP National Convention in Edmonton, where they passed a resolution to consider this LEAP manifesto, which had the fingerprints of David Suzuki and others all over it. Now, as much as one may like our Canadian economy to become greener and more or less fossil fuel dependent, there's also the reality of jobs and having an economy that's been built over the last century or so that's heavily levered to the fossil fuel industry. I mean, that just happens to be a fact. And yes, Alberta is one of the major one of the major areas of the country that is levered to that, but it's throughout the country. You have manufacturing plants in Ontario that service the Alberta and Saskatchewan oil patches. You have lots of workers in other parts of Canada who commute or who have been commuting to the oil patch to earn a paycheck. So Canada is heavily levered to the success of the oil patch in Alberta, and it's going to take a long, methodical period to diversify the economy further away from that. We are diversified. There's a myth that we're totally dependent on the oil industry. We are not, but for some reason, currency traders in particular like to focus on that element of the economy as being sort of the marginal factor in our terms of trade. But the fact of the matter is the NDP in Alberta know that they need pipelines, and they need to support their primary industry. Now, I don't think there's probably a happier person, aside from maybe David Suzuki, in terms of the outcome of the NDP policy convention than Christy Clark, the Premier of British Columbia. I mean, she just must believe that Christmas came early for 2017 when the NDP passed this LEAP manifesto. Because I do not see how the NDP in British Columbia are going to be able to campaign and defend their position, defend that manifesto outside of the Lower Mainland and in Victoria. It'll sell well in Point Grey, but the NDP already own Point Grey in terms of politically. But where they've got to make a breakthrough is in the interior of the province, and this is going to make their job even harder. So I don't think there's a happier person with the LEAP manifesto than the Premier, and she's probably quite thrilled that now the NDP in British Columbia have to wear that policy resolution into the upcoming provincial election.
Well, I saw Christie up in Fort St. John yesterday at a big rally supporting LNG, saying these people don't get it. This stuff is needed to promote jobs and to promote the northern part of the province.
Well, it's part of the diversification of the province, and energy is a small part in the overall picture of BC's economy, but it's an important part, and particularly in that part of the world and of the province. And let's say the real estate industry were to slow down here. Just suppose, Jim, just suppose for a minute that maybe things cool off and, the construction kind of just goes back to sort of, instead of, a boom, we just go back to sort of a normal kind of pace, or even takes a rest for a little bit. Well, you need a healthy resource sector to make up for that in terms of the money coming into the coffers. I mean, the property transfer taxes, paying, hundreds and hundreds of millions of dollars a year in provincial coffers. Well, right now, the royalties from natural gas are very tiny, if any. Well, if you have a commodities boom, where interest rates will go up, that will put a damper on housing, because, as interest rates go up, housing cools. How much, we remain to be seen, but it would cool it to some extent. So you'd have the commodity base of the province would provide extra tax revenue that you would lose on some of the housing related areas. So it is important to have a diversified approach to your economic policy, and the NDP are going to have a very hard time explaining where they're going to go with this. So I haven't heard a convincing story from the NDP leader Horrigan yet. And it's going to be a hard one for them to communicate about, and they're either going to have to completely disavow it and distance themselves from it, or they're going to have a lot of explaining to do to those voters that they're going to try and attract in outside of the urban parts of the province.
On the alternative energy front, I saw a story the other night about a barge being built in Richmond that will use tidal power to power a fishing resort, and they said it could provide enough power for 500 homes. Well, if it works for tides, why not just put barges like that along a river like the Fraser, where the water movement is continuous and you don't have to flood anything?
So there's all sorts of innovations that are popping up, and I think over time, there will be technologies that emerge as being scalable, and economical to deliver a solution, on a community by community basis. And when I mean scalable, it doesn't have to be scalable to the point where you need to, to generate enough electricity for a city the size of Vancouver. You just need it scalable where it makes sense, where you can attach it to even a local grid, right? And even if it's one house, it still has to be economical enough to do it without a perpetual taxpayer's subsidy. And the technology in the solar area has come a long way. Solar seems to be in the lead, but other solutions may leapfrog it. And this is the one concern I would have with Site C. Is that it's a pretty big bet that hydroelectricity power will continue to be the economic winner in terms of delivering electricity. You just don't know where these technologies are going to lead. So it is a risky bet that BC Hydro and the province is making. It's a good bet. I mean, I think all these technologies are still have to prove themselves, but as we've seen, the world can change pretty quickly, pretty fast when it comes to new innovations. So we'll have to see how that plays out for sure. But in the near future, I think that the BC government can easily incorporate a clean technology aspect to its policies and run with it. But the NDP are not going to be able to say, well, forget about fossil fuels. We're going to power the whole province with because I believe they're against Site C. So, what are they going to replace all this with? And right now, there's no clear answer. Once that becomes more clear, once it becomes obvious that there is a standout technology that can provide this solution on a sustainable basis, then that's another story. But we're not there yet, so I just think the timing for the NDP provincially is looking pretty bad right now, unless they can come up with something, really earth-shattering. And, they'll have to get some help from the people who crafted this NDP Manifesto to help them explain how they're going to, create jobs and power the province without resorting to fossil fuels. It'll be an interesting campaign. The last one I thought was quite fascinating. Well, this one will even be better, I think.
Ted, thanks a lot for chatting with us.
You have a great weekend.
My guest has been Ted Dixon, CEO and co-founder of IncResearch.ca, Canada's first online financial news and research service. You're listening to HowStreet.com radio. Find us on Twitter at TalkDigitalNet. Our popular YouTube channel is Talk Digital Network. Comments or questions for the show can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.